Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com, live at the CBOE today. Thank you for being here. Alan, before I get to your picks and your trades, just a quick thought on this CPI print and how the S&P is going back and forth over this unchanged line. What is going on today?
Well, today I think we're getting a bit of a pause before earnings season kicks off with the bank billions tomorrow. So, the inflation number was no surprise. We need the next catalyst. But the market's really been trading sideways, consolidating, which is a positive after the bounce from the bottom that we have that bullish divergence base. But in the big picture, the S&P has been trading between 3,600 and 4,200 for now 8 months. Now, a breakout of that would be the measured move would send us back to 4,800. So we've got some work to do, but technically the markets are set up and we're getting tighter and tighter and tighter in our trading ranges.
Okay, now I've seen a name, this UiPath, that has been trending lower basically throughout this year, hit a low back in November. Why is it on your radar today?
Well, Path is a stock that's trading around 13. What I tried to do today was come up with a bunch of inexpensive stocks in price, the actual price, not the PE. Now, this stock has been trading between 10 and 15 for 4 months. We're sitting around 13 right now. It's 90% off its highs that it hit at $80. Now, there's a gap up at 25 as well. So what I'm looking at here is I'm seeing a bullish divergence bottom. And this is what the theme of today is, meaning it's made new lows, but not new highs and implied volatility. That's a sign that the sellers have run out of strength. We've talked about this over and over again. This is what I use as one of my indicators to find a stock that's bad enough to buy, that's set up for success because it's had such a major decline that at some point the people are going to be buying these shares back because they've been short to lock in their profits. So originally I was going to go with Plug, but I know Ben is not going to like that chart. It's got a softer bottom. This one has more of a sideways range now for 4 months that if it breaks out here, then it targets 20. If we get to 20, this option gains 266%. So I'm buying the May 10 call for 375, and again, 10 is the low. So I've got some time for some development here. I've got an in-the-money option. I've got limited risk and a big payoff if this stock just gets to the $20 level.
Right, and and just because something's 90% off the highs doesn't mean it's still a buy. But in this case, you're looking very closely at all those metrics. Tell us, Ben, when you look at the UiPath.
Spoiler alert, Alan, I don't like this chart either, but Nicole, I'll show you why in just a second because to your point, Nicole, this one has been trending lower on the bigger picture, but as I look at the more granular, the move we saw off the November low around 10 up to that December high, that was up around 15, and well, you can see since then, as Alan mentioned, we're hanging out around 13, and we've been in a range, to say the least. Not a lot going on here as we are currently hanging out right around this level. But when in doubt, zoom out, right? Let's do that. Let's take a step back and have a look at the daily time frame. Now, here you can see a very well-defined trend environment to the downside, top left corner to bottom right corner, and Nicole, last time we talked PATH, we were talking about, again, the trend to the downside, and it was back on September 8th, right? And back then we established, 5 areas of consolidation that formed at lower and lower levels. We were talking about, I think your guest was trying to pick a bottom down here around this time, and I said, look, continuation more likely than change. Just another way of saying the trend's your friend. Thought about possibility of a new area balance forming at a lower level. As I look at what we've seen since the last time we had a look at Path, again, you can see, I think it's pretty well defined at this point that, yep, we've got an area, a 6th area of consolidation. So that just solidifies the working assumption that we're trending lower. Let's take a step back here, though, and let's add a little bit more time onto this chart. You can see this goes all the way back. We're looking at the last 2 years of data now, going back to 90, all the way to the lows that we just pointed out. And as I look at this, I just want to show you this also. Very well-defined trend environment. In this instance, 8 very clear areas of value that formed at lower and lower levels. And then just checking in on where things stand in terms of the 50, the 200. We're just inching above the 50-day moving average, still below the 200, but RSI is not really enthusiastic about this move. It's not really buying into this yet. I still think, Alan, we're trending lower. We're just consolidating here around 13.
He doesn't like this chart either, is what he's saying, and he thinks we're trending lower. Alan, don't let Ben get away with that.
Well, we've had differences of opinions, but if you look at and review a lot of the stocks we've talked about weeks and months ago, it's as much the strategy as it is the stocks. I'm just looking for a modest move. I'm looking for this stock to make a little bit of a bump, and these options provide big payoffs. So if we look at Verizon that we talked about on December 1st, Verizon, nobody liked that chart, was trading between 30 and then was trading between 35 and 40. It bounced and went up a little bit above 40, and the option that we talked about on that day gained 100%. There's still more upside on it, but I use good money management, and I sell half my positions at 50% gain and the other half at 100% gain. So it's about the math, it's about the probability, it's about the position for success, and you may not like the chart now, but when you do like the chart, that's going to confirm that these options are making big money.
All right, so let's take a look at VALE. This one, we talk about materials and iron ore and copper and raw materials. And we've seen commodities doing better of late. Tell me a little bit about your thoughts there.
Well, number one, XME, the ETF that tracks metal and minings, is still 20% off its highs. Now, individually, we've seen some stocks perform well. We've seen gold make new 6-month highs. Now, VALE is a stock that had a nice bottom bounce. It's been trading between 10 and 20 for a year. 15 is the pivot, the midpoint pivot to look at here. Again, 20 is the range top. We're about 18 right now. Now, this stock has got a PE of 4, so that's important here. We're looking at the June 15 call. Again, that's the midpoint of this range, trading about $3.50. It's $3 in the money, or trading floor 3 is this way. $3 in the money. So the expiration break even is only 50 cents higher, with June's got plenty of time for development. Now, getting to 20, which is just the range top, that option gains 40%. Getting to 25, the option gains 285%. So we've got 5 months. We've got the dollar going down, and it did have its bullish divergence bottom back in September, and now you can see that it's performed very well.
Right, understood. What do you think of this chart? 1830 here today, this recent run-up we're seeing. Ben, take a look.
Nicole, it's a reflection of what Alan pointed to, strength we've seen in metals, right? You've got copper, gold, both back to those May, June levels. Copper to 421 today, gold to 1906, and VALE, a reflection of that price activity. You can see, again, bottom left corner to top right corner, well-defined trend here, and this is the 5-minute time frame, so don't get too excited here, but I did go ahead and just establish how, well, look at this, a perfect example of the 2 phases of price development, Nicole. You get a horizontal phase around 1660, vertical up, horizontal around 17, wash, rinse, repeat, and again, you can see we're most recently breaking out of a horizontal phase around 1820, and you can see again we're seeing some initiative to the upside, higher highs, higher lows. This is a vertical move, again out of balance. So wanted to step away from this more granular 5-minute time frame, just taking a look at the hourly here. You can see a well-defined trend environment. This move we just looked at, just part of the bigger picture move from the beginning of November all the way up to, again, those highs up and through 18 this week. And as I look at this, step back for a second, you'll see 6 very well-defined areas of consolidation that have formed. Again, we're talking through November, December, and look what's starting to happen. They're kind of becoming a little bit more smaller here, tighter, and this could possibly just be one larger area. We're talking above 1750, below 1850, but we'll continue to watch the dust settle on this one as it plays out. Definitely high conviction here, right? Well-defined trend up, so I like this one in terms of Alan's thought process. You can see a nice bottoming pattern here on the daily, off the highs that we saw last year, up around 2090 to 1172, and look where we are, kind of working our way through the middle of the range. You know how I feel about that. Strength here opens up the door for a retest of that upper extreme, which is again last year's highs around 2090. Look at this RSI supportive of the move up as well. We're above the 50, we're above the 200-day moving average. Alan, I think you're onto something here with VALE and these metals that are on the move higher.
All right, so that and Verizon, I mean, we had your Verizon call, which did well, and maybe your VALE call could do much of the same. We'll have to continue to follow that one. And last but not least, WW International. You want to say something?
I'd like it a lot better if we see that breakout above 20, because that would confirm the move. All
right, we'll watch for that. We'll watch for that breakout. What about WW International? I mean, it used to be Weight Watchers, right? Is that what we're talking about here? I mean,
right.
This was a stock that did so well, and then the CEO came in and somebody else is departing, I saw earlier. I just feel like I've been watching it suffering. Went from $15 to $3, and I'm still waiting for something on this chart. I think it's been very tough for shareholders. But you see a bullish divergence happening. Explain that.
Right. Again, new lows but not new highs in implied volatility, telling us the emotion to the downside is not there. At some point, there will be some profit taking. Now, this is a stock that was at $100. The theme for today is inexpensive stocks. So, this one's trading at 4. So this is for you, Ben. Not that you need Weight Watchers. You're a very slim man. But it's got a PE of 4, and the stock is trading at, what, 450. So if you look at it here, it's been between 3 and 5 for 3 months. So a breakout of that range target 7. The target here, the midpoint from last year was 10. So that's really the target here. So I'm looking at a July 250 call, an in-the-money option. It's got 6 months of time. It's trading for about 2.25. The expiration break even is 50 cents higher. Now, if we just get to 7, this option will be worth 450, which is 100% gain. So it's again about the math on this particular stock and all these. But we also are seeing leverage buying, meaning that my indicator that measures, you're seeing people using the options markets to accumulate positions. So you're seeing something happen there, an undercurrent of smart money accumulating positions down here at these low levels.
Yeah, I mean, I went back 3 years. The high I saw was $46. It just, I like what you're saying here, so we'll have to take a look. And by the way, we used to call it WW Weight Watchers. Now it's wellness and weight. So Ben can participate in the wellness part. He does like triathlons and things.
Everybody knows Weight Watchers.
All right, Ben, it's all you.
But the stock doesn't look like it's doing very well here. Let's take a look first and foremost the move. I've got the hourly time frame here, and you can see the September high up around 6 to the October lows down around 3. And Alan mentioned how the last few months we've kind of been consolidating, but let's just begin with this high conviction trade to the downside that we saw, and then here again how we have just been sort of rotating. We're talking this sideways pattern around 420. So you get the big move lower, you get sideways consolidation, 0 rejection as of yet, and value forming at this new lower level. Alan, you mentioned the range here. I just wanted to point it out for our viewers. You've got the upper extreme at 5. You've got the lower extreme around 328, that low that we saw last month. Taking a step back from some of the recent weakness here, you're going to see that, well, take a look. It's just part of the bigger picture trend environment we've seen. You've got the highs from last year up around 1548, all the way down to that D-slow last year we just mentioned. And as I look at this, I want to just point out here kind of a similar pattern playing out, right? You get the high conviction move to the downside, balance forming around that area on the left side of your screen, 12. Another big move lower, and a value forms around 10. A breakout to the downside, 7. Again, wash, rinse, repeat. Here we are at 4, but you can see again a pretty well-defined staircase type pattern that's been playing out. Let's step back and look at where things are in terms of the 50, the 200-day moving average. Weight Watchers have been coming under pressure, and you can see now inching above the 50-day moving average. RSI supportive of this move up, but they've got some ways to go here to the upside before I can get excited about this one. I'd have to see it up and through 6, maybe 615 ultimately through that 200-day moving average. The small area consolidation that formed September, and I guess one could argue ultimately through 7, but still some heavy lifting to do here for WW as they come off those lows, but are still very much range bound. Again, 3 to 5 is the area I'm looking at.
Yeah, so not quite a believer yet as he's taking a look at those charts, Alan. And your trade goes out to the summer, right, Alan?
Right, it's a July option, so you've got 6 months of time for things to happen. Again, it's a $2.50 strike. You've got the right to be long from $2.50, and we're $2 in the money, and it's trading for 2.25, 2.35 or so. So, your expiration break even is, very, very small from here in dollar terms, and it's a chip down on something that I think is a brand, and there's obviously limited downside if you've got a 250 strike. There's a lot more risk reward potential for a stock pop.
Right. All right. Thank you both. Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Ben Lichtenstein looking at those charts. A great big three today. Thank you. Coming up next, let's spotlight Expedia in the